British Prime Minister David Cameron has warned that cronies of the Russian president are likely to face increasing sanctions in the UK and Europe, a move designed to put pressure on Russian President Vladimir Putin over the Ukraine conflict. With me now to speak about what this means for the financial markets and beyond is financial analyst Chris Skinner. Well, Chris, looking at this from a purely financial perspective now, and who will be the losers from the sanctions imposed on the Russian billionaires?
Well, the aim is obviously that it will be Russia itself that will be punished and feeling the pain of these sanctions. And certainly there will be some pain for Russia, but sanctions normally don't really work effectively because all it does is makes the people poorer, whilst the political objectives remain the same. Equally, for Europe in particular, there will be a lot of pain too. We're going to see around £32 billion worth, around 40 billion euros worth of lost trade this year, because Europe does most of its trade with Russia. And so for Europe, it's bad news.
Well, what exactly are the sanctions?
Well, sanctions go across multiple industries, from technology through energy and into banking and financial services. In particular in banking, for example, the Russian banks that are owned more than 50% by the government, such as Sberbank, are no longer able to raise bond or debt funding in the UK markets or European markets, and that's going to cut the ability to support those banks this year.
Well, Russian billionaire Gennady Timchenko said one of the results of these sanctions is he can no longer use Visa or MasterCard, and as a result he's instead gone to use UnionPay, the Chinese payment system. And there have been rumblings that banks will move away from the mainland EU to Hong Kong. Do you think these sanctions are really going to further fuel that?
Oh, absolutely. What we're seeing is a large flow of funds right now into Hong Kong, and as the Hong Kong Monetary Authority has to pump about $9 billion into the Hong Kong currency to stop a run on that currency and seeing its valuation just go through the roof. So what we're really seeing here is political posturing, which will be Russia more aligned with China, the US dollar being impacted potentially as a reserve currency longer term, and a restructuring of global power, because one of the things that comes into play here is the dollar is a reserve currency of the world, but since 2001, 9% reduction in dollar reserves worldwide, from 71% to 62% today. We'll see that continue, and this is just going to fuel that further. So as Russia moves dollars and investments out of America into China, China becomes stronger, America becomes weaker.
How legal is it to put pressure on individuals to then in turn put pressure on a government?
Well, there are particular sanctions for about 22 individuals that are the key allies of Vladimir Putin. And for those individuals, their ability to travel and trade is cut back immensely, as in they're going to have to stay in Moscow. To a large extent, that may not be a big deal because they're going to be supported by Vladimir Putin, so it's not going to be an issue to spend a year in Moscow whilst you know that you're going to be protected.
Well, putting aside a person's personal wealth, why haven't these sanctions targeted companies more? Because surely that would have more of an impact.
Well, there are some against companies, but if you take the energy markets, Europe depends on Russia for gas. So you can't really attack Gazprom, because then you're cutting off your nose to spite your face, because that's the supply of gas to Europe for the winter. Equally, there are other aspects of the markets that it ends up being tit for tat. So for example, we stop the Russian banks raising funds in London, and Russia says we won't import any apples from Poland or fruit and vegetables from Europe. So everyone loses. Well,
talking about cutting off your nose to spite your face, a lot of these Russian oligarchs pay tax in places like the UK. So surely this will really impact us as well.
If you look at the billionaires that are in Vladimir Putin's regime, many of them have invested heavily in property overseas. And in particular in London, about 61% of the newly built properties last year went into foreign ownership, and about 2% of the super rich houses in London are owned by Russian billionaires and millionaires. Now what's happening is we're seeing Switzerland open up their markets for foreign investment in their property markets. And overall, in the first quarter of this year, we saw about $51 billion invested overseas by the Russian super rich. So we are seeing a lot of flow outside Russia into the stable markets.
Well, Switzerland has now blacklisted some high-profile Russian billionaires to prevent them circumventing these sanctions. Are there any other loopholes out there?
There's many loopholes. If you look at the whole way in which trade is done between Russia and these markets, quite often it'll be what we call layered or nested structures of investments through foreign overseas companies that are owned by other individuals that are not blacklisted. So you can quite easily find ways around the rules.
How likely are the sanctions to affect flow of capital into the EU?
We're going to see, as I say, a contraction this year, about 0.3% of the European gross domestic product because of the sanctions against Russia. Russia equally is going to see a weak economy become even weaker. To a large extent, that affects the individual people in Russia rather than the government and the political objective.
Well, Russia has already started hitting back, as you mentioned, with these sanctions. They've already put their own sanctions on Polish beef, for example. What's the worst they can do? How concerned should we be if they do start really hitting back?
I think the big concern is another world war. Right now, economic and financial sanctions and using leverage of the weapons of finance against the economy of Russia is the most that we want to do whilst we're in a position to avoid a war.
And back to financially speaking, who's going to be the losers if Russia really, gives us the best they can in terms of sanctions?
I think everyone is going to be a loser. Europe does about 10 times more trade with Russia than the Americans do, but the Americans will see a loss of investment and support in their bank operations in Russia and vice versa. These sanctions that have just been introduced primarily target the energy, technology and the financial markets. The City of London gets about 1% of its earnings from dealing with Russia and the Russian banks, so that's an impact, but it's not going to damage the City of London immensely. The French kept their defence contracts. The Germans have kept many of their contracts with Russia because those were in the past. It's future contracts that will be impacted. There will be an impact in Europe of about 40 billion euros worth of lost trade this year with Russia, and most of that will be coming from some of the markets like Poland that no longer can export fruit and vegetables to Russia because Russia said that they don't want to deal with the Polish markets anymore for those particular commodities. Some of the smaller nations, I think, will feel the hurt a lot more than the bigger ones, and bear in mind this is just as Europe is going through a recovery from a massive sovereign debt crisis and recession. And all in all, nothing is ever going to come of sanctions from a positive viewpoint. All that happens is a lot of negativity, and you just hope that at the end of it, it impacts the political objective, which is that Russia wants to annex Ukraine, and we want to avoid that. That's the whole focus here, and the financial instruments being used to try and influence that agenda is obviously a strong influence, but it's not going to actually change the agenda. What will change the agenda is Vladimir Putin and whether he actually decides to back down, and using that word back down is probably the last thing that he'll ever do.
Chris, thank you.
Cheers.